I went to the grocery store and was shocked at the price gains and the empty shelves. We're talking serious inflation hitting right now. You know what that does to the economy? Interest rates rise and we move closer to recession. And no matter what they tell you, when rates rise, at some point, stocks fall. That's happening this Monday morning. The Dow is currently off 380, S&P 71, and the Nasdaq down 264. It's another big tech rout. Look at them, left-hand side of the screen. Google, Amazon, Apple, Meta, Microsoft, all down again. And here, take a look at rising interest rates. The yield on the 10-year Treasury, 3.11 now, but it was 3.2 earlier. Don't look for relief in Bitcoin. It's all the way down to $32,900 a coin. It's hard to see much relief. Shanghai and Beijing still tightly restricted, so our supply chain problems persist. The Biden team won't let America dramatically ramp up energy production, so there's a continuing supply problem there. And the Federal Reserve, well, they can't suddenly start printing a ton of money again to relieve the market. That would only make things worse. So here we are, watching the slide. Does anyone see a bottom? That's the question we've been asking, and it's what we're going to ask Jeff Sica, who joins us right now. Any close to a bottom? What do you think?
Well, you know what? One thing I've proven is that I've been very bad at predicting bottoms. But one thing I could say is that you have to look at this drug called margin, which is out there. There was $1 trillion of margin debt just a couple years ago. That has declined somewhat. But what's happening is this selling, this avalanche of selling, is being caused by margin debt, margin calls. So what I'm looking at for a bottom is to see that margin debt begin to unwind further, and then we'll probably see a bottom, but I don't think we're near that right now.
So this margin thing, okay, I can go to my stockbroker, borrow money, use that borrowed money to buy stock. That's called buying on the margin.
Right.
And when that stock starts to go down, the broker says to me, hey, Stuart, you better pony up some more money to keep your position here. So I've got to sell some stock to get the money into it. That's how it works?
Exactly. And these Robinhood investors, these 15 or 20 million Robinhood investors who never experienced a bear market and they're handed money for pennies on the dollar to margin, they're the ones who are panicking right now. They're the ones who are creating the selling. Plus, you don't know exactly what it's like carbon monoxide. You can't really tell it's there. It's invisible, and you don't know how much the institutions have as well. So this is all about leverage.
I believe that the dividend yield on the S&P 500 is very roughly 3%. I can buy a treasury security, hold it to maturity, and get 3% with no risk. So is it time for some people maybe to get out of stocks a little, get into bonds?
Well, Stuart, let me say this. I haven't owned a bond since I had a mullet and drove a Camaro. So it's been a while since I've owned a bond. And what I see is that, first of all, if you look at inflation, inflation is 8%. So even if you're getting 3%, you still have a negative return. And you said it. You have to be willing to hold to maturity in order to benefit, because you're going to see as interest rates go up, bond prices go down. So I would say that anyone who's going to buy a bond, you have to be willing to be married to that bond and stay committed to it, because you're going to see some declines as interest rates go up.
So no bottom yet from Jeff Sica. Okay, we'll leave it at that. Okay. Thanks, Jeff. Good to see you again.